Question 1. A policyholder in Indiana wants to add coverage for water backup from sewers or drains to their homeowner's insurance policy. What endorsement should they request to add this specific coverage? A. Inflation Guard endorsement. B. Scheduled personal property endorsement. C. Water backup of sewer or drains endorsement. D. Ordinance or law endorsement. Answer: C. Water backup of sewer or drains endorsement. Explanation: the water backup of sewer or drains endorsement provides coverage for damages caused by water backing up through sewers or drains or from an overflow of a sump pump. This endorsement is not typically included in standard homeowners insurance policies and must be added separately. The other options are unrelated. The Inflation Guard endorsement adjusts the coverage limits based on inflation. The Scheduled Personal Property endorsement increases coverage for specific valuable items. The Ordinance or Law endorsement covers increased costs due to compliance with new building codes after a covered loss. Question 2, scenario-based. John recently moved to Indiana and bought a home. His insurer issued a homeowner's insurance policy under HOTHRI special form covering both his dwelling and personal property. After a severe thunderstorm, a tree fell on John's detached garage, causing significant structural damage. Which coverage in his homeowner's policy would apply to this damage? A. Coverage A. Dwelling. B. Coverage B. Other structures. C. Coverage C. Personal property. D. Coverage D. Loss of use. Answer: B. Coverage B. Other structures. Explanation: in the HOTHRI special form policy, coverage B, other structures specifically covers detached structures such as garages, sheds or fences. Since John's garage is not attached to his dwelling, it falls under coverage B. The other options are coverage A, dwelling applies to the main home structure. Coverage C, personal property applies to the personal belongings inside the home. Coverage D, loss of use provides additional living expenses if the home becomes uninhabitable due to a covered peril. Question 3. Which of the following is not typically excluded from homeowners insurance under a HOTHRI policy? A. Flood damage. B. Earthquake damage. C. Wear and tear. D. Fire damage. Answer: D. Fire damage. Explanation: standard HOTHRI policies cover fire damage as it is considered a named peril. This includes accidental fires or damage from wildfires. The other options are typically excluded. Flood damage requires a separate flood insurance policy, usually through the National Flood Insurance Program (NFIP). Earthquake damage requires an earthquake endorsement or separate policy. Wear and tear is considered a maintenance issue and is excluded from coverage. Question 4. In Indiana, homeowner has a HO5 comprehensive form policy which covers personal property on an open peril basis. Which of the following losses would not be covered under their personal property coverage? A. Theft of personal belongings while traveling. B. Damage to personal property from a fire in the home. C. Earthquake damage to personal property. D. Accidental spillage of paint on a personal item. Answer: C. Earthquake damage to personal property. Explanation: the HO5 policy covers personal property on an open peril basis, meaning any loss is covered unless specifically excluded. Earthquake damage is a common exclusion in homeowners insurance policies, including HO5, and requires a separate endorsement or policy for coverage. Theft, fire, and accidental damage like spillage would typically be covered unless specifically excluded. Question 5. Under the Indiana Insurance Code, which of the following actions would be considered an unfair trade practice by an insurance producer? A. Encouraging a client to review their insurance policy annually. B. Offering a client a rebate to induce them to purchase a policy. C. Explaining the difference between replacement cost and actual cash value. D. Referring a client to a licensed appraiser for property valuation. Answer: B. Offering a client a rebate to induce them to purchase a policy. Explanation: offering rebates as an inducement to buy insurance is considered an unfair trade practice under Indiana law. The Indiana Department of Insurance strictly prohibits rebating practices to ensure fair competition and protect consumers. Encouraging policy reviews, explaining coverage options, and referring to licensed professionals are all ethical and compliant practices. Question 6. Which of the following is true about the Indiana FAR plan? Fair access to insurance requirements. A. It is a program for high-risk homeowners to obtain liability insurance. B. It is available only to residents living in flood zones. C. It provides access to property insurance for individuals who cannot obtain coverage in the voluntary market. D. It offers discounted premiums for homeowners who install fire alarms. Answer: C. It provides access to property insurance for individuals who cannot obtain coverage in the voluntary market. Explanation. The Indiana FAIR plan is designed to provide property insurance to individuals who are unable to secure coverage in the standard insurance market due to the high risk associated with their property. This can include risks like crime, deteriorated property, or being in a high-risk area, though it is not limited to flood zones. The FAIR plan does not provide liability insurance or offer discounted premiums for fire alarms. Question 7. Scenario-based. Mary, a homeowner in Indiana, files a claim after a windstorm causes significant damage to her roof. Her insurance policy covers her dwelling on a replacement cost basis. However, when her insurer processes her claim, they initially issue a payment for the actual cash value (ACV) of the roof. Mary is confused. Why did the insurer only pay the actual cash value initially, and what should she do next? A. The insurer made an error and Mary should request the full replacement cost immediately. B. Replacement cost policies often pay actual cash value first, and Mary will receive the rest once repairs are completed. C. The insurer does not cover windstorm damage, and Mary must pay out of pocket. D. Mary's policy likely has a large deductible, and she needs to cover the remaining costs herself. Answer. B. Replacement cost policies often pay actual cash value first, and Mary will receive the rest once repairs are completed. Explanation. Replacement cost policies typically pay out actual cash value (ACV), which is the replacement cost minus depreciation, until the repairs are completed. Once Mary repairs her roof, she can submit the final repair bill and receive the remaining amount to cover the replacement cost. There is no error, nor does the deductible explain the partial payment in this situation. Windstorm damage is usually covered unless specifically excluded. Question 8. In Indiana, which of the following statements about flood insurance through the National Flood Insurance Program (NFIP) is correct? A. Flood insurance is automatically included in all homeowners insurance policies. B. There is a 10-day waiting period for flood insurance to take effect. C. Flood insurance is only available to properties located in high-risk flood zones. D. Flood insurance covers losses from surface water, including heavy rainfall, storm surges, and overflowing rivers. Answer. D. Flood insurance covers losses from surface water, including heavy rainfall, storm surges, and overflowing rivers. Explanation. Flood insurance provided through the NFIP covers losses from surface water, such as flooding from heavy rain, storm surges, and overflowing rivers. Flood insurance is not included in standard homeowners policies, and it has a 30-day waiting period before it takes effect unless due to specific circumstances, e.g. mortgage requirements. It is available to properties in both high and low-risk areas, though coverage may be required in high-risk zones. Question 9. If a homeowner in Indiana wants to ensure that their personal property is covered at replacement cost instead of actual cash value, what endorsement should they add to their homeowner's insurance policy? A. Ordinance or law endorsement. B. Personal injury endorsement. C. Replacement cost endorsement. D. Scheduled personal property endorsement. Answer. C. Replacement cost endorsement. Explanation. A replacement cost endorsement allows the homeowner to insure their personal property for the cost of replacing it at current market prices, rather than at its depreciated actual cash value (ACV). The ordinance or law endorsement covers additional costs incurred from compliance with updated building codes, and the personal injury endorsement covers liability for certain types of personal injury. The scheduled personal property endorsement increases coverage for specific high-value items, but it may not guarantee replacement cost without the replacement cost endorsement. Question 10. Which of the following perils is not covered under a typical Indiana homeowner's policy without an endorsement? A. Fire. B. Theft. C. Earthquake. D. Vandalism. Answer. C. Earthquake. Explanation. A standard Indiana homeowner's policy typically does not cover earthquake damage. To obtain earthquake coverage, the homeowner must add an earthquake endorsement or purchase a separate earthquake insurance policy. Fire, theft, and vandalism are commonly covered perils in standard homeowners insurance policies unless specifically excluded. Question 11. In Indiana, a homeowner with an Hofferi special form policy experiences a loss when a tree falls and damages their detached garage. How will the insurance policy likely respond to the loss? A. The tree is covered, but the garage is excluded. B. Both the tree and the garage are covered under the policy. C. The garage is covered, but the tree removal costs may be limited. D. Neither the tree nor the garage is covered without a specific endorsement. Answer. C. The garage is covered, but the tree removal costs may be limited. Explanation. Under HO3 policy, damage to structures like a detached garage is generally covered. However, coverage for tree removal is often limited to specific situations and may be subject to policy sublimits, e.g. $500. Tree removal might not be covered if it didn't cause damage to a structure. Question 12. In Indiana, how long does an insurer have to acknowledge receipt of a homeowner's claim once it's been filed? A. 48 hours, B. 5 business days, C. 10 business days, D. 30 days. Answer: B. 5 business days. Explanation: Indiana insurance regulations generally require that insurers acknowledge a claim within 5 business days of receipt. This timeline ensures timely communication and processing of claims, though it may vary slightly based on policy terms or company-specific guidelines. Question 13. Which of the following is excluded from coverage under a typical Indiana homeowner's insurance policy? A. An accidental discharge of water from a plumbing system. B. Damage to the insured's home caused by an earthquake. C. Fire damage to a personal computer. D. Theft of personal belongings while on vacation. Answer: B. Damage to the insured's home caused by an earthquake. Explanation: earthquake damage is typically excluded under standard homeowners insurance policies. Homeowners need a separate earthquake endorsement or policy to be covered for earthquake-related losses. Question 14. An Indiana homeowner purchases a standard flood insurance policy through the National Flood Insurance Program (NFIP). Which of the following types of damage would not be covered under this policy? A. Water damage caused by heavy rainfall leading to surface flooding. B. Flooding from a nearby river that overflowed due to a storm. C. Mold damage that occurred due to flooding. D. Wind-driven rain entering through a damaged window during a storm. Answer: D. Wind-driven rain entering through a damaged window during a storm. Explanation: flood insurance through the NFIP covers damage caused by surface water flooding, such as heavy rainfall or an overflowing river. However, wind-driven rain that enters through a damaged window is considered a windstorm peril, which would be covered under a standard homeowner's policy, not a flood insurance policy. Question 15. In Indiana, if a homeowner has replacement cost coverage for their dwelling but actual cash value (SEV) coverage for personal property, how will their insurance company settle a claim for a damaged 5-year-old sofa? A. They will pay the full cost to replace the sofa with a new one. B. They will pay the original purchase price of the sofa. C. They will pay the depreciated value of the sofa based on its age and condition. D. They will not pay for the sofa at all since personal property isn't covered. Answer: C. They will pay the depreciated value of the sofa based on its age and condition. Explanation: with actual cash value (SEV) coverage for personal property, the insurer will pay the depreciated value of the sofa at the time of the loss, taking into account its age and wear. If the homeowner had replacement cost coverage, the insurer would pay the full cost to replace the sofa with a new one. Question 16. Which of the following is a valid reason for an insurer to cancel a homeowner's insurance policy in Indiana after the policy has been in effect for 90 days? A. The homeowner added a swimming pool to their property. B. The homeowner's risk profile changed due to the installation of a home security system. C. The insurer discovered that the homeowner misrepresented material facts when applying for the policy. D. The insurer wants to reduce its risk exposure in the homeowner's geographic area. Answer: C. The insurer discovered that the homeowner misrepresented material facts when applying for the policy. Explanation: after the initial 60-day underwriting period, an insurer can only cancel a homeowner's insurance policy in Indiana for specific reasons such as misrepresentation of material facts or non-payment of premiums. Adding a swimming pool or installing a security system might lead to policy adjustments but would not justify cancellation unless there was fraud or significant risk increase. Question 17. In Indiana, homeowners policy includes a scheduled personal property endorsement. Which of the following is most likely to be covered under this endorsement? A. A standard kitchen appliance. B. A high-value antique watch. C. A damaged furnace. D. Ordinary clothing items. Answer: B. A high-value antique watch. Explanation: a scheduled personal property endorsement provides additional coverage for specific high-value items, such as jewelry, antiques, or collectibles. This endorsement is useful for insuring valuable items at their appraised or agreed value, often without a deductible. Question 18. Under Indiana insurance regulations, if a homeowner's claim is denied, how long does the homeowner have to file a lawsuit against the insurer to challenge the denial? A. 30 days. B. 1 year. C. 2 years. D. 5 years. Answer C. 2 years. Explanation. In Indiana, homeowners typically have 2 years from the date of the loss or claim denial to file a lawsuit against their insurer to contest the denial. This statute of limitations may vary depending on the specific policy language and circumstances. Question 19. A homeowner in Indiana suffers a fire loss and is required to temporarily move out of their home during repairs. Which part of their homeowner's insurance policy will cover the cost of living expenses, such as hotel stays? A. Dwelling coverage. B. Other structures coverage. C. Loss of use coverage. D. Personal property coverage. Answer C. Loss of use coverage. Explanation. Loss of use coverage, also known as additional living expenses, pays for the increased cost of living, such as hotel stays and meals, when the homeowner is temporarily displaced due to a covered loss, e.g. fire, ensures that the policyholder can maintain their standard of living while their home is being repaired. Question 20. Which of the following would not be covered under an Indiana homeowner's personal liability section of their homeowner's policy? A. A guest slipping and falling on the homeowner's icy driveway. B. Damage caused to the homeowner's own car parked in their garage. C. The homeowner's dog biting a neighbor. D. The homeowner accidentally damaging a friend's property while visiting. Answer B. Damage caused to the homeowner's own car parked in their garage. Explanation. Personal liability coverage typically covers bodily injury and property damage to others, not the homeowner's own property. Damage to the homeowner's car would be covered under their auto insurance, not their homeowner's policy. Question 21. A homeowner in Indiana has a fire that destroys their home. The insurer determines that the actual cash value (SEV) of the home is $200,000, but the replacement cost is $300,000. The homeowner has replacement cost coverage. How much will the insurer pay to rebuild the home? A. $150,000. B. $200,000. C. $300,000. D. The insurer will not pay anything because the ACV is lower than the replacement cost. Answer C. $300,000. Explanation. With replacement cost coverage, the insurer pays the cost to rebuild or repair the home with similar materials without deducting for depreciation. In this case, the insurer will cover the $300,000 replacement cost rather than the lower actual cash value. Question 22. In Indiana, which of the following would be excluded from a standard homeowner's insurance policy? A. Damage from a burst pipe in the home. B. Damage caused by termites. C. Smoke damage from a nearby wildfire. D. Theft of personal belongings inside the home. Answer B. Damage caused by termites. Explanation. Damage caused by termites or other pests is typically excluded from a standard homeowner's insurance policy because it is considered the maintenance issue, not a sudden or accidental event. Homeowners are responsible for preventing pest infestations and addressing them before damage occurs. Question 23. A homeowner in Indiana has a personal liability limit of $300,000 on their homeowner's insurance policy. If a guest is injured on the property and the medical expenses exceed $400,000, how much will the homeowner be responsible for paying? A. $0. B. $100,000. C. $300,000. D. $400,000. Answer B. $100,000. Explanation. Personal liability coverage will pay up to the policy limit, which in this case is $300,000. The homeowner would be responsible for the remaining $100,000. To avoid this financial burden, the homeowner could consider purchasing an umbrella policy for additional liability coverage. Question 24. In Indiana, if a homeowner's roof is damaged by hail and needs to be replaced, what is the typical basis for settling the claim under most homeowners' insurance policies? A. Actual cash value of the roof at the time of the loss. B. Replacement cost of a new roof. C. 50% of the cost of a new roof. D. The homeowner must cover the entire cost. Answer B. Replacement cost of a new roof. Explanation. Most homeowners' insurance policies cover the replacement cost of a roof damaged by a covered peril like hail, meaning the insurer will pay the full cost to replace the roof with similar materials without factoring in depreciation. Question 25. A homeowner in Indiana adds an inflation guard endorsement to their homeowner's policy. What is the purpose of this endorsement? A. To adjust the coverage limits automatically based on inflation. B. To increase the deductible to keep premiums low. C. To add coverage for inflation-related damages. D. To adjust the value of personal property based on market demand. Answer A. To adjust the coverage limits automatically based on inflation. Explanation. An inflation guard endorsement automatically adjusts the coverage limits of a homeowner's policy to keep pace with inflation. This ensures that the policyholder has sufficient coverage to rebuild or repair their home even as construction costs rise over time. Question 26. In Indiana, how does a named perils homeowner's insurance policy differ from an all-risk policy? A named perils policy covers only specifically listed risks, while an all-risk policy covers all risks except those specifically excluded. B. A named perils policy covers all risks except those named in the exclusions, while an all-risk policy covers only specifically listed risks. C. Both policies cover the same perils, but an all-risk policy has higher deductibles. D. A named perils policy does not cover personal property, while an all-risk policy does. Answer A. A named perils policy covers only specifically listed risks, while an all-risk policy covers all risks except those specifically excluded. Explanation. A named perils policy covers only the perils that are specifically listed in the policy, e.g. fire, theft. An all-risk or open perils policy covers all risks except those that are specifically excluded in the policy, providing broader coverage. Question 27. A homeowner in Indiana wants to insure an expensive piece of art that exceeds the personal property limits of their standard homeowner's policy. Which of the following would be the most appropriate way to insure the artwork? A. Purchase a separate flood insurance policy. B. Increase the personal liability limits of their homeowner's policy. C. Add a scheduled personal property endorsement. D. Add a water backup endorsement. Answer. C. Add a scheduled personal property endorsement. Explanation. A scheduled personal property endorsement allows the homeowner to specifically list and insure high-value items, such as artwork at their full appraised value. This endorsement provides broader coverage and typically does not have a deductible for the insured item. Question 20. In Indiana, if a homeowner files a claim for wind damage to their roof and the insurance company discovers that the homeowner did not properly maintain the roof, what action might the insurer take? A. Deny the claim due to lack of maintenance. B. Pay the claim in full regardless of maintenance issues. C. Cancel the homeowner's policy. D. File a lawsuit against the homeowner. Answer A. Deny the claim due to lack of maintenance. Explanation. Homeowners insurance covers sudden and accidental damage if the insurer determines that the damage was caused or worsened by a lack of maintenance, e.g. the roof was already in poor condition. They may deny a claim because the homeowner did not fulfill their responsibility to maintain the property. Question 29. Which of the following would not be covered under an Indiana homeowners insurance policy with personal property coverage? A. Damage to a television caused by a lightning strike. B. Theft of jewelry while on vacation. C. Water damage to a laptop from an accidental spill. D. Flood damage to furniture in the basement. Answer. D. Flood damage to furniture in the basement. Explanation. Flood damage is typically excluded from standard homeowners insurance policies. Homeowners need a separate flood insurance policy to cover damages from flooding. Water damage from accidental spills or other sudden events may be covered. Question 30. In Indiana, homeowners insurance policy includes medical payments to others coverage. How does this coverage differ from liability coverage? A. Medical payments coverage applies only to the homeowner, while liability coverage applies to others. B. Medical payments coverage applies regardless of fault, while liability coverage applies only if the homeowner is at fault. C. Medical payments coverage has a higher limit than liability coverage. D. Medical payments coverage covers property damage, while liability coverage covers bodily injury. Answer. B. Medical payments coverage applies regardless of fault, while liability coverage applies only if the homeowner is at fault. Explanation. Medical payments to others coverage pays for minor injuries that occur on the homeowner's property regardless of fault. It is designed to cover medical expenses without needing to establish liability. Liability coverage applies only if the homeowner is found at fault for the injury or damage.